Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and here is a look at the stories for the day. On the last day of 2021, we take a brief summary of three personalities and a company which stood apart from the rest. They were the torchbearers of hope in an otherwise grim year. We start with Falguni Nayar, a former investment banker who took an entrepreneurial plunge at the age of 50 with her beauty startup Nayar. This year, she became India's wealthiest self-made woman after her blockbuster IPO debut. Then, of course, Prince of Vaccine, Adar Poonawalla, the owner of the world's largest vaccine-making company, Serum Institute of India, who helped us fight COVID-19. He is followed by ace investor Rakesh Jhunjhunwala. And the company of the year is Tata Group, whose bold move to acquire ailing Air India revealed its sound financial health. Let us know more about them.
In the male-dominated clique that is India Inc., few women have gained entry. India's women labour participation rate is just 21%, and one would be surprised that even in the upper echelons of the Indian business world, with all their talk of gender inclusion, female representation is dismal. In 2019, out of 1,814 chief executives and MDs of NSE-listed companies, only 67 or 3.69% were women. And last year, India had just one woman chief executive among Nifty 50 companies, just as in 2019. Given this state of affairs, Nykaa CEO Falguni Nayar, much like her startup, is a unicorn. The entrepreneurial bug bit her when she was 50, and the online internet beauty business was a complete break for Nayar, who came with 18 years of experience as an investment banker with Kotak Mahindra. In November this year, 9 years after being founded in 2012, Nykaa's parent company, FSN E-commerce Ventures, listed on Indian bourses. While 2021 saw several startups going for IPOs, Nykaa was one of the rare ones that was profitable. As Nykaa's valuation crossed the 1 lakh crore rupees mark after its public listing, the net worth of Nayar, who owns around 52.56% stake in the company, surged to $7.9 billion. In the process, Nayar, an alumnus of IIM Ahmedabad, has become the wealthiest self-made woman in India and is among the country's 20 richest people, the only woman in this all-boys club, or as various publications have called it, the Nykaa among the Nayaks.
Someone who is on the Time magazine's 100 most influential people of 2021 list is an obvious choice for this rap. The only son of Cyrus Poonawalla, who established the Serum Institute of India in 1966, Adar Poonawalla was sent to boarding school in London when he was 9 years old. Adar returned over a decade later with a degree in business management from the University of Westminster and joined the family business in 2001 without even an official designation. The next decade was spent under the shadow of his father, before Poonawalla became CEO of the company in 2011, and his moment of reckoning took almost another decade to arrive, when the world was under the grip of the COVID-19 pandemic. Rising to the occasion, Poonawalla took a calculated risk and ramped up vaccine production without waiting for government sanctions. The Serum Institute of India pumped in around $800 million into its Pune facility to manufacture millions of doses of the then unproven AstraZeneca vaccine against COVID-19. At the beginning of this year, SII delivered its first batch of AstraZeneca or Covishield vaccines for the Indian population. As of now, over 90% of the eligible Indian population has received at least one dose of the COVID-19 vaccine, and over 90% of them have rolled up their sleeves for Covishield. However, Poonawalla's plan of exporting a large chunk of his company's Covishield output hit a roadblock when the deadly second wave of COVID-19 hit India in April. By that time, just about 2% of India's population was fully vaccinated. So India banned the export of vaccines, hitting the supply of Covishield to poorer countries. While many have hailed Poonawalla for SII's role in India's vaccination drive, global commentators flagged what they call lack of transparency in his statements. In June 2020, Poonawalla had said that his company would manufacture 1 billion doses of Covishield for low and middle income countries, of which 400 million would be ready by the end of 2020. But in January 2021, SII had a stockpile of just 70 million doses. Poonawalla also faced criticism for offering the vaccine at different rates to the centre and the state governments. Nevertheless, as the year draws to a close, Poonawalla's and consequently India's worries seem to have eased somewhat. The company recently announced that it will reduce Covishield production by half, as it has fulfilled its orders to the Indian government and has a stockpile of 500 million doses. Meanwhile, another of Serum Institute of India's COVID vaccines, Covovax, has been authorized for restricted use in emergency situations. While his initial plans of supplying 1 million doses for low and middle income countries might have gone awry, Adar Poonawalla and his company still hold the key to ending this pandemic once and for all.
India's oldest and biggest conglomerate added more value to itself this year. The country's national carrier Air India, once owned by it, came back into its fold. Nationalization had taken it away, and now privatization has brought it back. Tata Group retained the title of India's most valuable brand by a considerable lead, with a brand value of $21.3 billion. Its crown jewel, TCS, also became the first Indian IT company to cross $200 billion in market capitalization. But for the group, 2021 will be marked as the year where it laid the foundation for the future. It is expanding to consumer-facing digital businesses, green energy, and electronics. Its chairman, N. Chandrasekaran, is injecting new life into what was being seen as just another big conglomerate. It is first connecting several brands across the Tata universe through its super app, Tata Neu, expected to launch early next year. To expand its offerings, it has acquired online grocer Big Basket, online pharmacy 1mg, and invested in CureFit. But arguably the most visible deal for Tata was its acquisition of Air India. The national carrier is returning to the Tatas after 68 years. This has raised speculations of a possible consolidation of Tata's aviation interests, which include Vistara and AirAsia India. Having said that, Tatas are emerging as a credible challenger to the dominance of Indigo, which has been ruling the market. It's not just aviation, the Tata Group is also stepping up its green energy game. This is an area where Mukesh Ambani and Gautam Adani have started a massive infrastructure building exercise. Tata Power has installed renewable power capacity of 4 gigawatt, with plans to ramp it to 15 gigawatt by 2025. This month, it was awarded the contract to build India's largest solar and battery storage project worth 945 crore rupees. Just as the government unveiled an incentive scheme to secure a semiconductor supply chain for India, Tata Group is reportedly planning to set up a semiconductor assembly and test unit. Tata is already building a high-tech electronics manufacturing facility in Tamil Nadu. With the entry of Tata, the competition in the Indian sky will be a sight worth gazing at, and consumers will reap the benefits.
"2021 could not be a better year for eternal India bull Rakesh Jhunjhunwala, as he completed 6 decades of his life. The best measure of this, his wealth, has more than doubled to $5.9 billion this year, according to Forbes. Shares of the Titan company, Jhunjhunwala's biggest listed holding, surged 55% year to date in one of their best annual performances. The 4.9% stake he holds in the jewelry and watchmaker is now valued at 10,500 crore rupees. He also reaped a windfall from some of his private investments after 4 of his portfolio companies hit the public markets this year. In March, gaming company Nayar Technologies got listed on the stock exchanges, followed by Barbecue Nation Hospitality in April and Star Health and Allied Insurance and footwear retailer Metro Brands in December, capping the year. The year was not without any controversy though. Rakesh Jhunjhunwala, his wife Rekha Jhunjhunwala, and 8 others settled a case on alleged insider trading in shares of AppTech by agreeing to pay more than 37 crore rupees to SEBI. This includes settlement charges as well as disgorgement of ill-gotten gains. But the highlight of this year has been Jhunjhunwala donning the entrepreneurial hat and plunging into an industry where the likes of Vijay Mallya and Naresh Goyal failed. He co-founded India's newest ultra-low-cost airline, Akasa Air. For this, he brought on board the former Jet Airways CEO Vinay Dubey and Indigo's former president Aditya Ghosh. Akasa unveiled its livery and tagline last week, 2 months after receiving initial clearance from the Ministry of Civil Aviation to start operations. It is expected to take to the skies next year, having placed a multi-billion-dollar order for 72 Boeing 737 MAX jets in November. With Jhunjhunwala catching the fancy of aviation, he should remember what Sir Richard Branson famously said: "If you want to be a millionaire, start with $1 billion and launch a new airline."
From the newsmakers who defied pandemic, let's see how this year was for the markets. It has been a roller coaster ride for the Indian equity markets that navigated multiple headwinds and yet notched up smart gains in calendar year 2021. As we draw curtains to the year, the big question on investors' minds is whether the bull run will continue in 2022. Here is a quick check on how the indices performed in 2021 and which stocks made you money in the year gone by. In this segment, we also do a deep dive to understand what's in store for the markets on technical parameters.
The Lal Street witnessed a record-breaking 2021 with the key benchmark indices hitting new highs during the calendar year despite threats from coronavirus variants, Delta and Omicron, high crude oil prices, and change in monetary policy stance by central bankers around the world. The BSE benchmark index, the Sensex, registered a lifetime high at 62,245.43 on October 19, 2021 and gained 21% in the calendar year 2021 till close of trade on December 30. In the process, the Sensex will log its best ever calendar year gain in percentage terms since 2017. Its counterpart, NSE Nifty, too has surged 24% in 2021. During the course of the year, the 50-share index had hit a lifetime high of 18,604. While the frontline indices, the S&P BSE Sensex and the Nifty 50 notched up smart gains, 2021 actually belonged to the mid and small cap segments. Both the indices on the BSE surged around 37% and 61% respectively during the year, far outrunning their large cap peers. Among Sensex stocks, Tech Mahindra, Bajaj Finserv, and Wipro were among the top performers in 2021. Sector-wise, the year belonged to power, metal, realty, and information technology sectors. And if you had an appetite for risk, there were opportunities galore. Some stocks in the mid-cap and small-cap index seemed to be on a mission to the moon. At the fundamental level, calendar year 2022 is likely to see central bankers looking to unwind the highly accommodative monetary policy stance in the wake of inflationary concerns, though analysts feel the threat of a resurgence of another wave of the pandemic still remains a possibility. Gaurav Dua, Senior Vice President and Head of Capital Market Strategy at Sharekhan, says the winds of change would create some ripples in financial markets in the initial part of the year. However, like the earlier experience of tapering in 2012-2013, the situation will improve as the year progresses. Despite the unseen, technical chartists feel the markets are headed higher in the new year. Let's go to Avadut Bakkar of Business Standard now to understand what's in store for the Sensex and the Nifty in 2022 based on the technical chart setup.
The calendar year 2022 promises another good run for Indian equity markets. As per technicals, BSE Sensex is likely to head in the direction of 70,000 and Nifty 50 towards 21,000 levels. These are near 21% higher than the current market price of both Nifty and Sensex. However, mid-cap and small caps are placed at a better spot technically. mid-cap on NSE looks to head in the direction of 39,000 and small caps in the direction of 14,000 levels. In doing so, Nifty mid-cap will rise approximately 30% and Nifty small caps around 25% levels. In percentage term, both Nifty and small caps are likely to outperform larger indices Nifty and Sensex in 2022.
That said, on Friday, December 31st, the last trading day of 2021, the markets are likely to buy time and remain range-bound as investors and traders lock in year-end gains or book losses.
Investors are hopeful that the stocks will continue their upward momentum in the next year too. 2022 may well hold answers to many of our curious questions too, which popped up this year. Will Metaverse, Web 3.0, blockchain, and NFT change everything as promised by expanding our virtual universe, or they are just hype? Let's find out more about these terms which became tech buzzwords of 2021.
Metaverse broadly refers to shared immersive digital environments where people can meet, create, socialize, work, buy goods and services, and attend events with other people who are not in the same physical space. A true metaverse is meant to perfectly replicate real life, although it is unclear how many more years it will take to develop. The term metaverse was coined in the dystopian novel Snow Crash 3 decades ago. It gained recognition this year after social media giant Facebook renamed itself Meta to reflect its new metaverse focus. Called the new version of the internet, the Web 3.0 will be built on the concept of decentralization, openness, and greater user utility. It will be based on the blockchain record-keeping technology where users would have ownership stakes in platforms and applications. In retrospect, the current version of the World Wide Web or Web 2.0 is characterized by social media platforms, which allow greater proliferation of user-generated content. This is a far cry from Web 1.0, which was all static and non-interactive, an entirely top-down approach towards information dissemination. Blockchain is essentially a database, but very different from every other database you may have seen. As the name suggests, a blockchain is a chain of blocks, with each block storing some information. Other key features of blockchain are that it is decentralized and by the very nature of that design, it is immutable. While cryptocurrency is the most popular use case of blockchain, governments around the world and in India are moving fast to leverage this technology for purposes of governance and public administration. NFT is short for non-fungible token. It is a unique digital certificate registered in a blockchain that is used to record ownership of an asset such as an artwork or a collectible. Most people did not know what an NFT was until this year, when sales boomed, sparked in large part by Twitter ex-CEO Jack Dorsey selling an NFT of his first tweet for $2.9 million. In India, the NFT craze arrived after the Bollywood superstar and actor Amitabh Bachchan auctioned his collection, including an autographed poster of his movies, as NFT.
With the rollout of 5G, the boundary between the virtual and the real world may well become more blurred next year. The rapid advancement in technology has transformed millions of lives. It has also helped us face unexpected challenges like pandemic. That's all we have for you today. Team TMS wishes everyone a happy new year. We will be back with more news and analysis in our next episode. Thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.